Agenda setting insight with our commentary on Reuters Breaking Views. Today's top stories. The future looks bleak for savers if the UK goes ahead with 100-year bond issue, and even partial success in hedge fund TCI's threat to sue Coal India's directors for bowing to government meddling could pay off, says Breaking Views. With me is Peter Larson. Let's start with the 100-year bond. Would a rational investor buy a 100-year bond?
Not if they were unconstrained. If they were making a rational decision, no. Because, I mean, we don't know what these things are going to yield, but let's say for the sake of argument they yield 4%. Mm-hmm. You know, can you really, on a 100-year view of the British history with all the crises and inflation and wars that have happened in the past 100 years, could you really say, oh, well, 4% is a good return for that kind of risk? Yeah. No. But the thing is, there are people out there who are constrained. Yeah. The Bank of England is in the process of buying 30% of the outstanding gilts that the government has issued. It's about $1 trillion outstanding. Mm-hmm. The Bank of England is on the way to 325. So, you know, but there are pension funds who are more or less required to hold gilts, and the longer dated, the better.
But it's a symbolic.
It's a symbolic thing. I mean, it's only going to be a couple of billion, we suspect. Yeah. So it's not going to make a meaningful difference to the duration of Britain's debt. But it's kind of
why make a symbolic move like this now?
Because to show that you can. Because, you know, I think if you're, I mean, clearly the UK is doing two things. One of it's trying to actually kind of get its debt under control through austerity and various other measures. But at the same time, it's also trying to distinguish itself from other European countries by saying, look, we actually have a much longer duration on our debt, so therefore the immediate repayment risk is not that great. And actually the duration on Britain's debt is already quite long. So, but this just kind of makes it a little bit longer at the edges.
And you know, we'll finish with just with the title of the piece. Say hello to 100 years of financial repression. Yes. Is what you've put on the top of this piece.
Because the point
really
is,
that bad?
Yeah. Well, the point is, no rational, unconstrained investor would buy these bonds.
Yeah.
But there are enough pension funds and banks who will basically have to buy it, and therefore it probably will get bought.
Okay, let's get to this TCI piece. Low risk, high reward. You say in terms of the activism. Just take us through this story and where we've got to now.
So basically, TCI has taken a position in Coal India, which is the state-owned coal producer in India, and is now basically charging its executives with being sort of state lackeys and not running their business in a commercial way. Now, Coal India is 90% owned by the Indian government, and the accusation is that they basically underpriced their coal for the benefit of, you know, the industrial users of coal, like, you know, kind of manufacturers and so forth. Now, they may well have a point. The question really is kind of whether they have any chance of success. But it's a low risk, kind of potentially high reward move. If they can get Coal India to do make even a small shift in its pricing, you know, and try to be more kind of rational, then the value of their investment will improve. You know, it's not a huge. I imagine it's not a huge position. I imagine the cost of launching this kind of action is not enormous. But actually, the point we're making is that there's a potential benefit for TCI, although it may not get anywhere. But if it succeeds, there is a potential benefit. But actually, there's also a potential benefit for India in general, which is that if you had a more rational, more economic pricing of coal and less of these kind of companies doing the state's bidding, you would actually also have a more efficient economy.
Okay, Peter, many thanks for that. Peter Larson. For more agenda setting insight, watch our US Breaking Views show. That comes on every day, 12:30 Eastern, 16:30 GMT. I'm Axel Threlfall. This is Reuters.